Hey guys, welcome back. In today's video, we are talking about the signs of short squeeze, the trapped hedge funds, the short seller burdens, and many more in this video. First, we're taking a look at this. A mere 2.7 million shares of AMC traded. Of these, more than 70% have been in fact traded off exchange, disrupting price discovery even further. I can honestly say this is abnormal in both volume and suppression of lit volume. It's crazy the amount of prime that's allowed daily. So when you take a look at AMC today and you wonder why, despite how the market has performed, AMC is only up 0.33%. Well, when you take a look at the data, the off-exchange data, what you will see is that a large percentage of it has obviously gone to the dark pool. Now, something that we've always known is that a large orders has always gone into the dark pool, and especially a large buy orders have always gone into the dark pool. For those of you who don't know what it means that the buy effects, the pressure that it should normally have, will no longer actually have any impact on the market because it's not hitting the lit exchange. And so this is why we're not seeing the real price discovery of AMC. For anyone that brings up any other factors when they talk about fundamentals, when they talk about all of this, when they talk about, the industry, the market structures, the business structures, etc., whilst that all of course come into play, the very fact that we are seeing a 70% of exchange volume should already show you that it does not allow us to actually see the real price discovery. You take a look at what's happening today. Cinemark had $108 million in volume dollars today. AMC had $13 million in volume dollars today. The crimes really are that obvious. Now, this is showing two different things firstly. Now, the first thing is we should be seeing a very low volume in AMC in the first place. The reason why I say that is because unlike Cinemark, we have to understand AMC had its float bought up and locked up years ago. The retail have bought into the AMC float, the original float, the only float that should exist has already been bought up by AMC and no one is selling. And so to see AMC having low volume dollar days, that should be normal. However, what we also know is the fact that they create synthetic shares every single day. And it's why we have been seeing other days when we see a large amount of volume. And so this is what we have to understand in terms of the fact that we are seeing a lesser decrease in the volume could firstly give us signs of the fact that shorts are decreasing their capital, their allocations, and struggling to create synthetics. But when you look at it from another perspective, which is understanding the fact that they are trying to put the money into Cinemark and not AMC, well, you can understand why these articles are always saying that you should be investing in AMC's competitors as opposed to AMC. The biggest reason for this is because they obviously are trying to take that buy pressure away. One of the biggest reasons why they use the dark pool in the first place, like we said at the very start of the video, is because they want to remove the buy pressure. And so if they can convince people into buying these other theater stocks, then it's also another way of stealing that buy volume. Now let's take a look here. AMC shares are traded in dark pools, aka off exchange, 76% of the time because market makers don't have enough real shares. Instead, they create synthetic shares to artificially dilute the stock and sell shares of stock they don't own. This is legal and is done via payment for order flows. And what we are looking at is maybe not today, maybe not tomorrow, but I smell a short squeeze. Anytime there is such a massive number of retail shareholders who own 90% of a stock float that issued shares, and the company makes an incredible recovery post-crisis, the potential for shorts to get obliterated out of existence is a very real plausibility, especially when there's so much naked shorting on behalf of the market makers for the hedge fund counterparts. And so that's what we're looking at, and that's what we're talking about. So when you understand the fact that they are constantly trying to suppress us, they're constantly doing all of this, and we're seeing even to the height of 75%, you understand what's happening in the markets right now. You understand that when they need to use dot pool the most, when they need to hide buy pressure the most, it really is just a sign of the fact that they are worried about what's to come. We're seeing how they're lacking liquidity right now. We're seeing how they're failing to create more synthetics than they have in the past before. We're seeing how recently they've been warned of their over leveraged positions. And these are all just signs of the fact that we are seeing a short squeeze. And then you take a look at this from Biotech, who says, AMC investors buying up shares leaves none for trapped hedge funds trying to cover and exit. Now, this is the biggest part. When we talk about how they're trying to divert us into buying other stocks, not only because it decreases the buy pressure, but obviously because then it doesn't actually trap them, because then there's more shares available for them to buy. You can then see Biotech later goes on to say, it's why a certain group on X pushes fundamentals, and now one meaning foreign charities, is to reduce competition for shares the hedge fund bosses desperately need. Now, I want to clarify when Biotech Moves talks about this and talking about certain group on X pushes fundamentals. Now, this isn't saying that we shouldn't focus on fundamentals or that AMC shouldn't focus on fundamentals. We've always talked about, especially on this channel, and I'll always keep it 100%, we've talked about how the fundamentals is very important on AMC. However, the particular group that we are talking about right now is that recently, and we've covered this in the previous videos as well, there are people saying if you are buying AMC shares and not actually going to the movies to watch movies, to buy AMC products, you are actually a short seller. You are actually not supporting AMC. And we talked about how stupid that is. And they talked about how if you actually long on AMC, you're actually shorting AMC. And so these are the people that we're talking about in terms of the certain group that are pushing fundamentals. It isn't the ones that are saying, AMC's fundamentals is bad or that you shouldn't focus on AMC's fundamentals, but rather the ones that are saying the only way to help AMC is by ignoring the shares and going to the movies. And we talked about how both ways of going to the movies to improve the fundamentals, to improve the finance of AMC, and buying shares of AMC are all methods of helping AMC. And so that's obviously what we have to make it clear, because by not buying AMC shares, you've obviously left up shares for these hedge funds to then buy up. And so that's why it's very important to understand what is happening. And then you see here, honestly, I look at the shares on loan creeping towards 20% of the flow, and I see off-exchange trades between 55 to 80% every day, and I see the box office improve fundamentals, and I think shorts really are desperate. We will win. And what we talked about and what we have seen is that when you take a look at the broad perspective of all the data that's combined, and you see all these factors that I've mentioned in my videos, you understand that again, they are not in a good position. They are all struggling right now. They are failing to keep up what they once were constantly doing. And now this isn't a surprise to us. We talked about everything that's going on right now. We have the fundamentals issues right now as well. We're recently going to be seeing the increase of the deduction of interest rates going into next month. And so multiple things are going into the future. And so multiple things right now are showing a better sight for AMC, and then a very struggling and suppressed side for the hedge funds. And so you can see how we talked about with how the situation is turning around. And then you see here, the good news is no matter what the market does, driven by war, oil prices, inflation, Fed rates, market crash, AMC stock price is set at $3 by the market makers. AMC investors have nothing to worry about, only short sellers hold the burden of all worries. So this is what we're talking about. Firstly, we talked about how there isn't a big of a correlation between AMC and the overall market, which is talking about how when we see the stock market going up, we're not seeing AMC going up with it. That's because it's being suppressed. But the same thing with when the market is going down, we're not really seeing AMC go down because the people who hold AMC aren't selling. And so you can see how this is actually very bad for the short sellers. Whilst they can keep us down for the time being, when we see a massive crash happening, when we see something that is sucking their liquidity and that is pushing their margins to the limit, that's when they can't suppress AMC. And that's when AMC will run. Now, normally what will happen is that, of course, if the market crashes, all these other stocks will crash along with it. And that's how their margins are kept still within the boundaries. But like we talked about with AMC, because the people who hold AMC won't sell even during the market crash, when we see how the shorts are going down, when we see how these short sellers are going down one by one, and all the margins are reaching the limits, they don't have the money to go continuously financing their positions, AMC will stay at the same. And even staying at the same is extremely deadly. And that's already a burden to them. And it's talking about how even if we are able to stay at the very same price, when all of their markets are crashing down, when all of their margins and collaterals are gone, that is still going to set off the short squeeze for AMC. And that's why we always see the price suppression. But yeah, guys, thanks for watching this video. I'll catch you guys next time.